We'll start with our monthly recommendation. So we have two IT companies this time, Infosys and Sensatech. So Sensatech is a mid-cap company and Infosys, as most of you know, is a large-cap company. So FY23-24 was a very muted year for IT. This was mainly because the US market was little down, inflation was high and the expectations from the US market was very down. So our IT companies are very dependent on orders from the US companies. So because of this, the revenue growth was very slow. And if you look at Infosys, the hiring data last year was very low. It was almost 70% down from the previous year. But right now we are seeing very positive outlook for the IT company. They are expecting record hiring for the past 5 years. If you're looking, they are expecting a record hiring this year. And also, one of the main revenue sources of IT companies come from the banking sector services that they provide. So this quarter, we are already seeing few improvements in that. So we can expect a very good IT sector performance for next year. And next we have NTPC. NTPC is the largest power generation company in India. It's a public sector company. But one of the reasons for recommending this is because their renewable energy subsidiary NTPC Green is expected to have an IPO this month or next. IPO, it's almost 10,000 crore IPO. So this will really, so even if you're buying one NTPC share, you will be eligible for shareholder quota for IPO. And next we have Sharda Cropchem. It is an asset-light company. That means they're not really manufacturing any of their products. Mainly what the company does is they will just file for new registrations of their products. They'll get it approved. They'll outsource their manufacturing to third party. And a very good strength of this company is they have strong distribution channels all over the world. Their exports is very strong. And but coming to the chemical sector, what happened post-COVID was that the Chinese inventory dump was very high. So the supply from the China was very high. So this led to a fall in most of the chemical prices. So because of that, the chemical companies were doing very poorly past 2 years. But this year the Chinese production was reduced and we're expecting good price recovery. So there's a very strong chance of profitability in the coming quarters. And finally we have Wonderla Holiday, formerly known as Vegaland. So they operate amusement parks in Kochi, Hyderabad, Bangalore, and recently they opened a new park in Odisha, Bhubaneswar. And they're also constructing a new park in Chennai, which will be operational by FY26. So we see very good revenue stream coming even from the new park and the upcoming parks. And one more thing that we have noticed is they have a lot of underutilized land in the existing parks. Kochi and Hyderabad park particularly, there are a lot of underutilized land. So we see good revenue potential from all these places. And coming to September month review, Nifty went down almost 3%. And looking at the stocks we recommended, the JM Financials have achieved the target, but rest everything we can hold. Just one particular thing we want to speak about Star Health is, we recommended Star Health last time. Last week almost there was a data breach, and there was reports that almost 3 crore data was hacked from Star Health. So that is one of the main reasons why the stock went down almost 10%, 11%. But this does not change our view on the company. The company is fundamentally very strong, and that's why we are still asking our investors to hold the company. And we have a new fund offer, Kotak MNC fund. Those who are interested, they can contact the mutual fund department. They'll guide. Okay, thank you.
Has come down mainly because FIs were selling. Almost 70,000 crores they have sold in the last 10 trading sessions. Mainly for two reasons I feel. The first one is the China trade, where some short-term money has been moving to China because of the stimulus they have announced. But today morning also one Chinese meeting has happened. Chinese finance ministry, they have announced several percents. But analysts were saying that it is disappointing. Most probably Monday the Chinese market may fall a little bit because the announcement were not up to the expectation of the analysts. Today's stimulus announcement. So all these commodity stocks, they are mostly reacting to this Chinese stimulus. And I feel that's only short term, because the other big issue with the Chinese market is that the US election is coming. Suppose if Trump wins the election in US, right now very tough contest is there between this Democrats and Republicans. Suppose if Trump wins, means definitely we may see a big round of selling in Chinese and Hong Kong market, because he is Trump is very negative on trading with China, and is likely to impose a lot of duties for Chinese products. So at least on sentiment wise, Chinese market will fall very sharply if Trump wins. So that risk is also there. And other than this China trade, why our market is falling is that because of the new regulations SEBI has announced on the F&O market. They asked to restrict the weekly contract to one index per exchange. So Nifty has chosen, NSE has chosen Nifty, and BSE has chosen Sensex. And Nifty is dropping this bank Nifty financial index. Then the other mid cap index. These three will stop trading from weekly expiry. That means many this option trading FIs are there. Who dedicatedly trading only these options like Millennium and Jan Street and all. So they always hold some cash shares also. Then only they can manage the index. They hold huge quantity. Then only if they want to manage the index, suddenly they want to bring down the mid cap index, means they will sell all the mid cap shares they are holding it for short term, and the index will fall, and they will try to manage the mid cap index. Then bank Nifty, Fin Nifty, they will try to manage it. For bank and Fin Nifty, two shares is enough. ICICI Bank and HDFC Bank, because HDFC Bank and ICICI Bank alone contributes, has more than 50% weightage in Bank Nifty. And if you sell some 300-400 crores worth of these two shares very quickly, means immediately both shares will fall, and that will get reflected in the index. So they will be having huge quantity of these shares to manage the index. So once these shares are getting out of a weekly Nifty options, means they don't have the job to be trading in India in options. They will that selling also has come in our market. If you watch closely, the day the SEBI has conducted the board meeting, on the day only the selling started in by FIIs. Friday, actually SEBI announced the changes one day later for F&O, whereas the other changes they announced on that day. On that day, the FII selling has started. If you watch the selling by FIIs in the last 10 days. So from there it is still continuing. Most probably the China trade sale will almost get over very soon, and F&O selling also will get over. That's what our expectation is. And now, Padmanabhan will tell the market.
Effectives. Thank you for watching. Bye bye.